What a day for Tesla, down over 9%. If this isn't truly a buy the dip moment, I don't know what else is. We're going to get into exactly what's going on with Tesla stock today and everything you need to know. We do have some news coming out, but overall, is this rally over, or is this a major overreaction? Let's get into it here in this video. If you want to stay up to date with everything going on with Tesla every single day, as well as the broader markets, well, hit that subscribe button as well as like the video because it's free 99 and it costs you nothing to do so. And now let's go ahead and get straight into it. Let's go ahead and start off this video with what you guys probably didn't expect to happen today. This earnings was very bullish for Tesla. Even some of your bears are raising their price targets today, and you've actually seen multiple price target increases and not one downgrade and not one lowering of an analyst price target, in which you wouldn't expect to see if Tesla was down 9%. You would have expected to see some downgrades or some price targets getting lowered. In fact, quite the opposite today. Chris Pierce from Needham continues to rate Tesla as a hold and does not have a price target. Dan Levy from Barclays continues to rate Tesla as a hold with a $260 price target. Tony Sacconaghi from Bernstein continues to rate Tesla as a sell with a $150 price target. One of the most bearish analysts on Tesla is actually quite comical to listen to him speak because he has absolutely zero knowledge on Tesla. How these guys get employed is honestly beyond me. Colin Langan from Wells Fargo rates Tesla a hold with a $265 price target. Daniel Ives from Wadebush rates Tesla a buy with a $300 price target. Now let's get into some of the price target increases here on the day. And there is 3 of them. Ronald Jewishcom from Guggenheim. Again, one of the most bearish analysts on Tesla stock. He still has a sell rating for Tesla, but he raised his price target from 112 to 125. Tesla stock is down almost 9% today. Why are your bears raising their price targets? Well, maybe it's because this was actually a very good earnings, and maybe the rally continues from here. William Steen from Truist Securities continues to rate Tesla a hold. He raised his price target from $240 per share to $254 per share. And Vijay Rakesh from Mizuho raised his price target from $300 per share to $330 per share and continues to hold his buy rating. Ben Kallo from Bard continues to have a buy rating with a $300 price target on Tesla stock. These price target increases today have taken the average consensus price target from analysts from $226.93 to $232.13 per share. Again, but Tesla stock is down 9%. Why is that ultimately happening? Well, this could just be a massive shorting attack. This could be a little bit of profit taking. This could be manipulation. It could be all 3, and it likely is all 3. Tesla is mostly owned by retail investors. Hedge funds and institutions, they have massive short positions on Tesla, but they're not really allocated to Tesla in the way they are to other big tech names. And the way that Tesla's business is performing, you would think hedge funds, institutions, and money managers would want to be more allocated to Tesla, even considering the latest rally that we have seen compared to an Amazon or a Google. That is really not favorable with analysts right now. So when I think about this logically, what's likely happening today is they're trying to beat down the stock. They're trying to get you to sell so they can get positioning at a cheaper price. $265 per share is a lot better than $300 like we seen yesterday. That's what's going on. So I don't expect this dip to be the dip that keeps on dipping, unless the economy goes to absolute shit and we head into a recession, which does not look likely. So, long story short, they need you to sell. They need to drive down the price of Tesla so they can buy into this great business at a much cheaper cost. In other words, I don't expect this crash or fall, whatever terminology you would like to put on it, to last a long time. If this was truly a cause for concern and Tesla was going back under $200 per share, as some people are starting to say, then why are the bearish analysts raising their price targets? I think that's a pretty good sign that Tesla stock has a lot more to rally from here, that this could be, again, an ultimate buy the dip opportunity. Tesla's stock beat on everything. It beat on EPS, it beat on gross margins, it beat on revenue, just literally everything you could look at and people were concerned about. Tesla smashed all of those expectations, as it typically does. That's probably a reason why some of the bearish analysts are throwing in the towel. But as this article says, the three biggest things that Tesla beat on was revenue. Revenue came in at $24.97 billion, up 47% year over year, and beating Wall Street's projection of $24.7 billion. Operating income decreased slightly to $2.4 billion in Q2 for a 9.6% operating margin. Adjusted EBITDA rose 23% to $4.7 billion. Across the board, much better than expectations, even better than your bullish analyst expectations. Again, why price targets are getting risen here today. And this 9.6% operating margin, this is multitudes better than any other vehicle manufacturer, let alone an EV manufacturer, which most of them still lose money on every vehicle that they sell. Earnings per share came in at 91 cents. That also beat analyst estimates for 79 cents of EPS. That was a huge beat. And last but not least, auto gross margins came in at 18.2%, a 4-year low for the EV maker, but that also exceeded the analyst expectations of 17.5%. Tesla smashed all these earnings estimates. I mean, that's the bottom line to it. This was a standout quarter. Another reason why I don't think this dip is going to be a long-lasting one. Elon also said on the earnings call last night something that I think will be a massive catalyst that can indeed and likely will push Tesla stock to all-time highs once this news is ultimately announced. Quote, "We are very open to licensing our full self-driving software and hardware to other car companies, and we are already in early discussions with a major OEM about using Tesla full self-driving." Now, why this is key is really for a couple of reasons. Full self-driving has almost 100% profit margins, around 90% net margins. So any revenue that they would make from this, whether it's subscription, in which it's about $200 a month for that currently, or if it's just a one-stop shop, one set price, it gets installed into these vehicles. Maybe it's Ford, maybe it's GM, who knows? But a major OEM, he said. So obviously it's probably Ford or GM or maybe even Toyota. Now, a lot of people say, why would any of those automakers use this software? Well, it's kind of like ChatGPT in my opinion. You're getting everyone that is jumping on this bandwagon. Apple, Microsoft, Google, literally everyone. Even Tesla to a certain degree. Same thing with full self-driving. If these automakers don't create their own 10, 20 years from now, that might be like Intel today, where they just did not innovate enough. And NVIDIA and AMD came back to eat their lunch. Kind of like one of those situations. If you can't beat them, you might as well join them. Now, a lot of people say, well, isn't there self-driving robo-taxis out there? Sure there is. In select cities like San Francisco. Those softwares will never be able to be deployed globally or even domestically. Because why? It takes millions and millions of miles on the same roads to train these software. Now, Waymo and other operators operate in specific cities because they have completely trained their software in those cities. Those softwares cannot leave the city and operate. You can't train your software in every individual city. What Tesla is doing, it's the longer approach, but it's the foolproof approach. You train your software on everywhere at the same time. Just for comparison, Cruise and Waymo have about 2 million miles of driving time. Tesla has 2 million miles of driving time every single day with full self-driving. The data that Tesla has alone, you can't compete with that. And nobody will ever be able to ultimately compete with that. So this is a big deal when it happens. It could be the end of this year. It could be 2024. I think crunch time really starts in 2024. As, the Cybertruck comes out and a lot of people turn their attention to Tesla. And that's also another key, the Cybertruck. The Cybertruck is going to be a massive catalyst towards the end of this year as well as 2024. Now, most importantly, I think a lot of us fail to remember on a day-by-day basis, but the Cybertruck has the most pre-orders that you have ever seen for an electric vehicle. The Cybertruck currently has 1.6 million pre-orders. And Elon said on the earnings call last night, quote, "Demand is off the hook that you can't even see the hook for the Cybertruck." Well, not only is 1.6 million Cybertrucks presumably already sold, waiting for delivery and waiting for that revenue to come in, but what that's going to do is something very specific for Tesla that you have not seen with any other automaker since probably Lamborghini and McLaren. It's so different, there's nothing that compares to it. When you see a Cybertruck on the road, everyone's heads are going to turn. That is like advertising on steroids, right? Remember what the Wolf of Wall Street says, which I think is pretty good overall general advice. Any publicity is good publicity. Bad publicity is good publicity. Good is obviously great publicity. Tesla and the Cybertruck, no matter if you love it or hate it, massive publicity. Everyone's going to be talking about this. So looks like to me at least, there's only better things to come, especially as the economy and the data that we're currently getting looks to be supporting a soft landing. Sure, the stock has run up quite a bit. So you're giving back 8.5% at the time of recording this video. But you just got justification. The Tesla stock can go a lot higher from here. Don't take my word for it. Come to your own conclusions. But this is not the dip that keeps on dipping. This is the dip that you buy the dip and ride the rip. Today, Tesla actually received some somewhat negative news, and this is on recalls. So 16,000 Model S and Model X vehicles will be recalled. This is not a soft over-the-air kind of software update kind of recall. This is for seat belts that may not be attached correctly. So this is a recall. You actually have to take your vehicles in and actually get it serviced. The other recall is for front-facing cameras that might be misaligned. The recall impacts less than 1,400 Model S and Model X units. Now, when you hear this, it sounds negative, but it's really not. As for a financial impact, investors can pay attention to warranty expenses. Tesla recognized an expense of $532 million for warranty claims in the first quarter of 2023. That's about 2.7% of total automotive sales. That's typical. GM recognized a warranty expense of $966 million in the first quarter, about 2.6% of sales. So there's nothing in particularly different from a Tesla to any other vehicle as far as defective, products, right? Things coming off the assembly line, there's going to be issues. This never affects Tesla stock, so it's not affecting the stock today. As you guys are probably well aware, we have entered into the third quarter of 2023. That means your Q2 13F filings are starting to come out. All hedge funds, institutions, money managers, just rich people have to file these reports if they own Tesla stock. So you get an insight to where ownership currently is. Now, some of these funds are massively buying the dip. Take a look at this fund in particular. Bank Julius Baer & Co. owns 5,971,000 shares of Tesla. They increased their position 98,000%. in the last quarter. This is worth $156 million. That means that they owned like 10,000 shares, 5,000 shares before this last report. Massively bought the dip. You're seeing a lot of new green here as well. A lot of new funds are taking on brand new positions, and funds that already had a position are, for the most part, buying the dip. 286% increase, 498% increase, 275% increase, 77% increase. You can go on and on. So the hedge funds and institutions that are allocated to Tesla are pretty heavily allocated to Tesla. If you're in it, you're in it. But the allocation overall, including all hedge funds and institutions, is very low. Tesla is mostly owned by retail investors. That's why retail has outperformed hedge funds and institutions so well over the last couple of years. So they want you to sell your stock. They want the price of Tesla to fall. After all, remember, even the bearish analysts are throwing in the towel and saying this was a great quarter for Tesla. Things should be getting better from here. They want you to sell your stock to drive down the price lower so they can get into a position not at the highs, not at 300. 250 sounds a little bit better than 300. That's what's ultimately happening here. Now let's look at the charts and what the technicals tell us. As of yesterday, you hit a high of $299.29 per share. You fell about 1%. Today, you're down about 8.5%. You bounced pretty perfectly off of 265 at the time of recording this video. That could be the bottom of this sell-off. It's possible that Tesla could fall to the next support level at $250 per share, or even fall to the lower end support level at $240 per share. If you fall to 240, I mean, buying the dip looks attractive now, it's going to look even more attractive then. And you bet your ass that's exactly what the hedge funds, institutions, money managers, and rich people are going to do. Just the facts are, Tesla's business is doing better than expectations. It's doing well. And if you were in a different market and maybe stocks hadn't run up the way that they had, the stock would be going higher today. The valuation case supports Tesla going higher. That's the bottom line, especially since they're in talks to license full self-driving. That could add, as Tesla says, the biggest growth that you have ever seen for Tesla. So sure, if you continue to dip, that's a pretty welcome sign in my opinion. I would like to buy some more Tesla. If you fall under 240 for whatever reason, if the markets crash next week because big tech earnings, 233 is where the 50-day moving average is currently. That's going to be a major level of support. Under that, it's the 100-day moving average at 207. And under that, it's the 200-day moving average at 193. And let me tell you, if Tesla goes under 200, I am cash out refinancing all the properties I have. Pulling everything out. I might sell a kidney, okay? That's what we're talking about if we go under $200 per share. That does not look likely. Now, the RSI is at 51.70. It's now at neutral. Considering this rally that you have seen, the RSI being at neutral, pretty good sign. Although it is falling sharply, and that's not necessarily a great sign, if you do start to bounce from here, the RSI should support up move from here. As you can see from Tesla over here on the Wall Street Journal that breaks down the EPS estimates for 2023, this has risen after this quarter's beat and likely needs to go a lot higher. Your full year 2023 earnings estimate is $3.39 per share. 3 months ago, it was $3.47 per share, and 1 month ago, it was 3 cents lower at $3.36 per share. Estimates just went higher for 2023. Again, supportive of higher prices for Tesla. But your full year 2024 estimates, they were at $4.50. Now it's at $4.75. So this brought down the P multiple by about 2.5. So next year's earnings, compared to the stock price and where it is today, looks a little bit more attractive. Now, 3 months ago, the EPS estimate for 2024 was $4.95. If we do get a licensing of full self-driving announcement, these estimates are going to need to go a lot higher. And that's what ultimately is another thing that you can put in your bullish thesis. Maybe it's not the thing that you solidify your bullish thesis on, but this is a positive, no matter which way you want to put it. As far as the broader markets and this earnings season so far, it hasn't been friendly to a lot of names. Netflix down over 10% today. IBM's down. Discover, like your credit card company, down over 16% today. TSMC, bad earnings. American Airlines, not so great earnings. Across the board, just not great earnings. Today in after hours, Intuitive Surgical, Capital One, CSX, PPG, Berkeley's, Bank of Ozark, First Financial Bank, Amerint, Associated Bank, Knight, and Swift Bank will be reporting earnings. And then Friday pre-market, American Express, Comerica, Huntington, and Independent Bank. So still a lot of banks here, and Capital One could be a big one here in after hours. I did make a trade on Capital One following Discover's earnings report. If you guys want to see the trades that I am making every single day and come talk to me about it, if you have questions or you want to learn something or literally anything, well, you can come talk to me. Link down below in the description of this video for the trading community. June home sales dropped to the lowest pace in 14 years as short supply chokes the market. June home sales were 18.9% lower compared with last year. That is the slowest sales pace for June since 2009. Quote, "There are simply not enough homes for sale," said Lawrence Yun, chief economist for Realtors. And this continues to be the main story. The median price of existing homes sold in June was $410,000, the second highest price ever recorded by Realtors. Last June's price was the highest, but by barely 1%. This median measure, however, also reflects what's selling. And right now, with mortgage rates much higher than last year, the low end of the market is most active. So long story short, how you could sum up this video is things are slowing down in the broader economy. Earnings are not great across the board. They're not terrible, but they're not as people would have hoped, considering valuations are so high for the S&P as well as particularly for the NASDAQ. As far as Tesla, it looks likely that hedge funds, institutions, and big money managers want you to sell, and they want the price of Tesla to fall so they can buy the dip. Note, the bearish analysts are raising their price targets today. That should make you scratch your head. And even though Tesla stock is down about 9% today, you have seen 1,400 orders from hedge funds and institutions, totaling $420 million, with a positive order value of 55%. Still more positive than negative. Again, keep in mind, they want you to sell your stock. They want Tesla at a lower price. They don't want to buy at the highs, but they want to buy Tesla. So what we got out of Tesla's earnings was very positive. Beats across the board, some new information about licensing of full self-driving, which I think will be a much bigger topic of conversation in the next coming days and the next coming weeks, likely fueling another upside move. This dip looks like a firm buy the dip opportunity. Let me know what you think about all of this information down below in the comment section. Like the video as well as subscribe to the channel if you made it to the end of this video. About 65% of you guys, 70% of you guys are not subscribed. So go ahead and do that if you want to stay up to date with the latest information on Tesla every single day, as well as the broad markets. Again, if you want to come trade with me live in real time as well, link down below in the description of this video, as well as the links for merch, as well as the links to get yourself free stock with Webull. Thank you for watching. Most importantly, enjoy the rest of your day, and I will see you in the next one.